Morning traders. It is 8:01 a.m. Chicago time on Wednesday, the 7th of October 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Um, just looking at the what's influenced the trade overnight. Not much to report there. Bank of Japan reported that it's maintaining its monetary base expansion at an annual pace of 80 trillion yen. This helped keep a bit under the Asian markets overnight. We saw a nice pop up at 245 Central, between 230 and 245 Central in the ES as a result of that. Germany's industrial production came in weaker year on year, stronger month on month. The FDAX is up another 1%. Crude oil strong again today with treasuries and the euro showing slight weakness. Looks like more risk on sentiment in the overnight session. Fed's Williams, after the close yesterday, said he still expects FOMC to raise rates this year. And Monsanto reported a 19-cent loss versus expected zero earnings for this quarter. But at the same time, it announced a $3 billion stock buyback. The stock is up slightly. Looking ahead at what's in store on the calendar, at 9 Central, 10 Eastern, we have UK GDP estimate. At 9:30, we have crude oil. Crude oil inventory is expected at 2 million barrels surplus. U.S. distillate inventory is expected at negative 800,000 barrels. U.S. gasoline inventory is expected at zero. And then at 2 p.m. Central, we're looking for consumer credit, expecting 19.5 billion. And then as far as speakers and other events, at the IMF, apparently at 9 o'clock Central, the IMF is set to release its global financial stability report, followed by a press briefing. So we'll probably hear a little bit of that trickle into the news feed. And then other than that, we have Fed Speaker Williams, who spoke after the close yesterday. It's a voting dove. We'll be talking at 1 o'clock Central, just an hour before that consumer credit report. That's it for the news. Let's look at what we did yesterday versus our expectations. Overall, the market met the expectation that we set out yesterday in yesterday's Trader Bite. Generally, the main hypo for yesterday was to basically trade in the prior day's range, inside of Monday's range, with 71 to 71 area being a key area to watch. What we also saw from the day before is we had a very weak high that was left behind, and the expectation was at some point in the session, and I did expect it later rather than earlier, that the market will take out that high at 1980, the weak high, and then fall back in for a quick test. But overall, I expected us to chop around most of the day and then potentially drive into the close as we have been over the last few sessions. Unless things change, we have to assume that the same players are doing the same thing on a daily basis. So overall, the market did basically that. It did dig deep down. It tested this point of control from Monday, which I expected it to be a bit of a long shot to get down there, but given the bullish sentiment that's been pushing the market. But overall, yesterday was a resting day. If we compare yesterday to the day before, let's switch to the 15-minute and look at, okay, what have we done here lately? We start to see that the market's definitely seeing prices as being fairly cheap so far. So we've moved from a trending profile So there's no value here. The market consistently sought value last Friday as it traded through the NFP high of 1928 and pushed all the way up to 43 and a quarter. Monday we gapped through. There was no responsive selling whatsoever. It was pretty strong day. Trend up. Monday left us with a double distribution with the cutoff at 1971, which happened to be also yesterday's overnight point of control. And then yesterday we have what looks like a fairly evenly distributed profile, a Gaussian profile. The value area of this profile is valid. And is something that I'm going to be watching for today. The value area goes up to 1975.50 and all the way down to 1967 and a quarter or so. So I'm going to be watching these prices today. As always, on a balanced profile, once the market falls back into the range, then we're looking for value high. Once value high is taken, then we're looking for a test and a chop around the point of control. Once the point of control does not, it tests out and does not find buyers still, then the next area to test is value low for a value cross. So yesterday overall, we had a higher, in a price action sense, we had higher high, higher low versus the prior day. So there's the higher high, the higher low. But we also had a higher point of control, but the point of control was stuck in the prior day's value area. So these 2 days are balanced together. So in a 2-day balance, what do? We look at those 2 days as one session. So we build a microcomposite around that to see where the key areas are. And the key area right now is 1972. 1972 is the MC composite, microcomposite, with a very fat and upward skewed profile. Very boxy profile. There's a lot of consensus. What this boxy profile says is that the market sees a lot of consensus in these prices. The market sees these prices as very fair. And those prices range from 1963 or so all the way up to 1975. That's going to be the balance area. So if we fall back in, we're trading right on the extreme of this range right now, 1982 and a quarter. If we fall back in into the value area, expect it to be very turbulent and choppy and stuck here. And that's really what I'm expecting for today. The overall temperament is bullish, as I said, risk on today based on the overnight session and the way things are shaping up. Gold has just dropped below the zero mark and is lower. The Bund is lower by 10 basis points. The Euro is lower by 22 basis points. The 10-year is lower by 24 basis points. And the U.S. Treasury bond is down 57 basis points based on yesterday's close. So you can see money is moving away from protective assets into more aggressive growth type assets, including commodities and stocks when they open. So with that being said, we expect a higher high. We're pushing up against the high. Let's take a quick look at the overnight session to frame up the last piece of the puzzle. So the overnight session, a short covering profile, quick move up, and then balancing on the high end. So this is a P-shaped short covering profile. There's a minor distribution below, but overall the market is squeezing shorts right now. It's really pushing those shorts right out. And with the high the way it is, let's zoom in here and look at how this high is shaping up. So you can see the high, multiple 15-minute tests, a triple top with a lot of volume right near the high and not a gradual dry up. It's a very sudden drop. So this is a weak high here. So I would expect the overnight high to be taken early on in the session to fulfill our overnight stat. There was a fair amount of buying again on the Bank of Japan announcement. That's this bar here. And you could see there's a lot of delta that went through, a lot of buying on the offer, a lot more buying on the offer than selling on the bid on this bar up. And this bar basically frames the evening session entirely. So again, we're back to 1973, 71 from yesterday. Anything below there starts to put the buyers in neutral, and as an orange light for the sellers. But until then, we're looking higher and we're looking for higher targets. And we're going to follow basically the bullish plan. The market has not had the pullbacks that I'd like to see in order to have a strong push up. So we're leaving behind a lot of artifacts here, a gap zone, and so on. But the market's done this for quite some time. It drops and then it pops up really strong. So we're still in this wide balance zone that we've put in since the drop at the end of August. And we're trading in balance, but we're on the rally side. So this has a little bit of room to go on the upside. Probably we'll see a reaction around the 2000 mark, the century figure. But overall, when I look at this composite profile, it's got 99.75 here as an LVN for this area for the composite. But overall, this really doesn't have much stalling it. We're about to bite into the most recent high tail here, and once we start to take that out, we tested the open of this day. Once we start to move up into this stem, this flag here, up the flagpole it goes, it's likely to take back everything up to 2011.50. But right now, the immediate target above is 2000. There's plenty for us to work with here as far as structure, because we have sold off. We do have this gap zone beneath us, and we still have an attraction here, a very big magnet down at 2275. So we'll let this float up for now, but expect, because we're in the balance zone, expect this to continue to make its run up, and then expect it to pull back and push into this this gap zone and fill it back in like we very often do. So coming into today's session, there's really not much more I can say other than the idea that we're likely to open. We're against the point of control here. As long as it's above that 1973-71 area, it's likely to test 85.50. I expect the same behavior as yesterday. I expect it to pull back to the 75.50 area for a test, bounce up into the prior day's high at 82.25, fall through, test this 72.50, 73 area, which is again the MC point of control for the 2 days, and then chop around in here for the afternoon. That's the primary hypo for today. That's my time. It's 8:15 already. I wish you the best of luck. I did do a webinar yesterday for S5 Bookmap. For the folks at Bookmap, it's a tool that I use. I posted it on Twitter if you want to check it out. Have a look at it. I walk through the process of creating context intraday, just like I'm doing with you here, and stalking a trade using the Bookmap tool. And I also took a trade in real time. It wasn't on my live account because that's on a separate machine, but it's just walking through the process, the thinking process, the trade management process, adding to a position once it's going in your favor, managing the theoretical average using the trade analyzer tool that I've used since my prop days way back, and all of that, and closing out the trade and then moving on to the next thing. It puts a lot of things together, and I think it's the type of thing that I would normally reserve for Stage 5's traders, but I think you should have a look at it. It's on my Twitter feed. I posted it last night and this morning. You might want to check it out. Good luck today, and I'll catch you tomorrow. Take care.